what I learned about myself in high school and in college, more through sports than anything else, was that I wasn't the most talented guy on the field, but I had a work ethic to succeed that was 110%. So I overcame some of the gifts that I didn't get by just working very hard through perseverance and having confidence in myself to attain my goal.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every day with a mindset of stewardship over ownership and applying billionaire principles. Our ultimate goal? To help you scale and compound your wealth so you can give more or all of it away for maximum impact. I'm your host today, Brett Swarts, and in every episode, we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their principles, values, secrets, and wisdom, providing each of us with the insights we need to reach the next level of success and impact. Hey, I'm excited about our next guest. He's out of the great state of Texas, and he has over 42 years of experience in precious metals and rare U.S. gold coin buying and selling. His company, American Gold Exchange, has a national reputation for integrity, consistency, and high service to clients, reliability, and transparent pricing. He enjoys the endorsement of numerous national newsletter writers, educational conference promoters, and private investors in the financial market analysis, real estate, and tax professional industries. And he's been quoted in Forbes, MarketWatch, and appeared on Fox Business, and so much more. Please welcome to the show with me, Dana Samuelson. Dana, how are we doing?
I'm doing great, Brett. Thank you for having me on today.
Absolutely. And for our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Well, I've been in the precious metals markets since 1981 when I got out of college with a German degree. It was like anybody getting out of college in 2009. I got hired to work in a vault because I could be trusted. And over the next 10 years, I worked my way up through up the ladder of corporate responsibility. I had the good fortune of working for Jim Blanchard. Jim is the man who was the most responsible for the private relegalization of gold ownership in the United States in 1974. Gold used to be currency and money in our country, and there are two different things. Money is something that has intrinsic value, while currency is a medium of exchange. Well, gold was money and currency from ancient times all the way to 1933. And under drastic economic situation, Franklin Delano Roosevelt outlawed the private ownership of gold, and it stayed that way until 1974 when Jim got it re-legalized following Richard Nixon taking us off the gold standard in 1971 when the dollar was no longer backed by an ounce of gold. That was a standard following World War II. So since then, we've seen inflation. We've had a quiet period in the 80s, and now we're in a more turbulent period of the 21st century, like we were in the 70s when inflation was high. We had a couple of oil shocks. We had war in the Middle East, and we're back to the future now. So what I've done is I've spent my career learning about these markets, trading, billions of dollars of precious metals. As I've advanced in my career, I've become president of the Professional Numismatists Guild, which is the leading organization of rare coin dealers in the country. So that's a pinnacle of my career. I'm also an expert witness for the government in a couple of allegedly fraudulent precious metals dealer cases where it was alleged that dealers were overcharging specifically the elderly in their IRAs. So I'm trying to give back to my career as best I can. And now I'm doing podcasts like yours to help spread the word in an intelligent fashion, why precious metals matter, because they matter more now than they ever have before.
Dana Samuelson, everybody. And by the way, if you want to learn and connect with him right away, you can go to amergold.com. That's AMER gold.com. Love the background, love the experience, and I love the mission that you're on. And so in today's episode, we're talking about preserving wealth with gold and silver. However, I also want to just add to that as we're going through this episode, just, investing in gold and silver in a time like this. Like, in other words, has it ever been more crucial and more important to understand what your options are, what your rights are, and the ability to invest into something that's timeless? We're going to talk about that as we go along. But before we go there, Dana, I want to touch on a couple things. I believe we've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. I want you to back up to the earlier days before Dana was, maybe he was in high school at the time. I'm curious, what are those one or two strengths or gifts that you believe you were given, and how does that help how you help and bless people today?
Well, what I learned about myself in high school and in college, more through sports than anything else, was that I wasn't the most talented guy on the field, but I had a work ethic to succeed that was 100%, 110%. So I overcame some of the gifts that I didn't get by just working very hard through perseverance and having confidence in myself to attain my goal. I played soccer, and I wasn't the biggest guy on the field, but I learned by watching others, specifically one of the best soccer players in the world, Pele, play for years and years. And I just learned how the game really worked. So study, hard work is really my kind of spidey sense super strength.
Amazing. With that in mind, let's dive right into the topic at hand, which is preserving wealth with gold and silver. So I think let's start with the bigger issue right now, right? The timing of all of this. So what's the number one secret or insight or wisdom to understand of why investing in gold and silver is so crucial right now?
Well, there's a couple things going on that are coming together at the same time that really are making a big difference in the world, in the world's economies, and in the precious metals markets. So we've gone through two economic crises now in the 21st century. First of all was the great financial crisis, 2008 to 2011, and again COVID, where we had economic closures. But during both of these phases, we watched governments around the world create trillions of dollars of new currency out of thin air. So in my mind, we're literally living modern monetary theory today in the real world. It's not just some concept that came up 5-6 years ago from academics. We're living it, where you can print all the money you want and it won't matter. Well, we're finding out that it does matter. And what has this caused behaviorally to happen? Most fundamentally, it's affecting central bankers around the world, and this is how. After World War II, governments around the world were sitting on big piles of gold that they had from coins that were currency prior to World War II. And from the 1950s all the way to 2008, for most of that time, central bankers were sellers of gold. They were shedding that gold. Since then, since we turned the printing presses on in 2008, 9, 10, and into 11 with QE1, 2, and 3, central bankers have been net buyers of gold. So from 2010, 11 to 2021, central bankers on average purchased about 500 tons of gold a year. Now, putting that into perspective, annual mining production is about 3,000 to 3,500 tons a year. So they're buying about a fifth to a sixth, a seventh of what the mines produce every year. Now, since Russia invaded the Ukraine and we weaponized, quote unquote, the dollar by sanctioning Russia and seizing their assets, countries around the world have said, hey, if we become politically afoul of the US government, they could do the same thing to us. So you've heard about the de-dollarization movement, where countries don't want to trade in the dollar anymore. The problem with that is the dollar's entrenched in the financial system. It's the most trusted currency. It's not going anywhere. The dollar is going to continue to be the world's most dominant currency for years and probably decades to come. But what they've done in response is they've slowed down their US Treasury buying, and they're buying a lot more gold, to the point where the last 2 years they've bought 1,087 tons in 2022 and 1,037 tons in 2023. They've doubled their gold purchasing. So while they can't shed the dollar as fast as they like, they can buy gold as fast as they want to. And they're doing it. And it's for a couple of reasons. One is what I just mentioned about sanctioning. But number two, they're the ones with the printing presses. They know what they're doing. And they're hedging their bet against their trading partners and against the paper currencies that they're making out of thin air themselves. And the buying that they're doing is material enough, in my mind, at the margin now to really affect the price. We've had the gold price go up about 15% in 2024, and there's no fear in the US market like we had during the great financial crisis or during COVID. This is a much more fundamental price signal to me, buying in massive scale.
Okay,
And
make
it's
sure
going to
I
really
got
start
with
to
you.
matter.
Yeah, so thank you for sharing that. So it sounds like the big challenge for everyone is the government is printing trillions of dollars out of thin air through these two great economic crises, COVID and the 2008 economic crash, and effectively central bankers around the world just started to buy starting in 2010 versus being sellers, right? And you coupled that with now we're hitting with inflation, right? Let's kind of bring this together. So what does that mean now, given that background with where inflation's at and where it could potentially go as well?
Well, if you measure gold in other currencies going back 20 years, on average, gold has gained about 8% in every major currency around the world over the last 20 years. Now, it's lumpy. We'll go through periods of time where gold is really in demand, where it can gain 15%, like it's done in just the spring of this year. And the next year it might gain, 2%, or it might actually lose 5%. But on average, gold is gaining against every major currency for the last 20 years about 8%. And when you go through an inflationary period, like we've just gone through in the US, where inflation peaked at 9%, and you're losing that purchasing power of your dollar, it's probably 25 to 30% in aggregate over the last 3 years. We all know what it costs at the grocery store today versus what it cost a couple of years ago. Precious metals are a way to preserve that purchasing power in a environment where not only are governments around the world creating new debt every year, but they're now inflation's taking a big bite out of the purchasing power of what we do have.
All right, great. And so back with Dana here. And by the way, you can learn more about Dana Samuelson by going to amerigold.com. That's amerigold.com. And so the inflation that's happening, right? And so you were just kind of finishing your thought there about inflation. And then what can we, I guess really the next question is, what can we do about it as investors, right? As people that want to not, preserve our wealth and not get slowly eaten away. If you have this 8% on average for over the currency, what are some great ways to invest in gold, or what kind of mindset do you want to take when it comes to gold and silver?
Well, I'm a physical precious metals and rare coin dealer, so I handle the physical product. That's really my area of expertise. I think people, if they want to save, have some savings, they shouldn't do it in dollars, which are going to just deteriorate in value over time, especially when we go through a higher period of inflation like we've been through. And who knows whether inflation will really become unsticky and get down to the Fed's target or below it, 2%. So I think people should think of precious metals, gold in particular, because it's leading, because central banks are buying so much of it, as a way to save money, save their hard-earned wealth. And according to the World Gold Council, who've done studies going back 20 years comparing gold to real estate, stocks, and bonds, it is one of the top performers because of its 8% gain against other currencies annually. But it also helps to mitigate risk. So if you have 5 to 10% of your assets in precious metals, specifically gold, you enhance your profitability and help to reduce exposure to other markets that are uncorrelated or inversely correlated to precious metals. And it's a great way to actually have a savings account outside of the dollar, which will be deteriorated over time. And it's also a private and transferable wealth. I could literally hold 100 ounces of gold, is about the size of a paperback novel that weighs about 8 pounds. You can carry it around in your pocket. And today it's worth $250,000. So I could literally have $250,000 worth of gold in my pocket and no one would know it. And it's a way to easily transfer wealth and transport wealth as well if you want to move some of your, assets around.
Interesting. And so it sounds like a great way to save money, great way to hedge against inflation, and a great way to not let the trillions of dollars erode the value of your dollar if you're just sticking in savings accounts. Is that a fair summary so far, Dana?
Yes, correct.
Right. So kind of a no-brainer. So talk about how easy it is to do that with the American Gold Exchange. Like how do you guys come in and talk about your services and how your best clients are utilizing your services?
So, as I said, we're physical precious metals dealers, and I do business with the trade and with the public. So, I primarily buy from the various mints around the world that make 1 ounce, 10 ounce gold pieces, 1 ounce silver coins, 100 ounce silver bars. We also do a little bit in platinum and palladium, but that's really a little bit more speculative. So I buy from the manufacturers, the US Mint, the Canadian Mint, the Austrian Mint, refineries in Switzerland, and then offer those products to the public. We do it through our website with online, transparent, very competitive pricing. And we want to help people with what they're trying to accomplish. So we're consultative in nature. I really recommend if people are going to buy physical gold, they buy the products that I just mentioned from the US Mint, the Canadian Mint, or the Austrian Mint. These are the most widely traded and competitively priced bullion coins. They're just really round bars made by sovereign mints instead of a square bar made by a refinery. They're the most commonly traded, competitively priced items. So it gives you liquidity when you want to sell. Some of my competitors online have 2,000 items, 3,000 items on their website. You don't need that. These three mints are vanilla, chocolate, and strawberry when it comes to flavors of ice cream. It's very simple. You pay a small premium for manufacturing, distribution, and profit. So they're really not trading vehicles per se, because the buy-sell spread works out to about 3, 4, 5%. And on an ounce of gold, that could be $60 to $100. So it's not something you want to buy and sell quickly. It's something you want to buy and hold for a longer period of time, which is why I said it's a good savings vehicle.
Okay, so
Right?
let's walk through an example, right? So say I had $1 million right now, right? And I have the option to go into T-bills around 5%, right? And let's say the cash flow or the return on that is about $5,000, right? Am I doing that right? 5%, or that'd be $50,000. $50,000?
50,000.
$50,000, right? Yeah. So then I go $1 million into gold, right? And you're saying the average has been about 8%. Is that a fair summary on the appreciation, right? So if I were to hold for a year, but it might cost me about 3% to sell. So in that scenario, assuming everything came out, evenly like that, would that be kind of a break even if my goal was just for that year to do $1 million? Or walk me through perhaps if I'm missing any of those numbers so far.
No, you got it exactly right. If we have average appreciation on $1 million of 8%, that's 80,000, and you have a 3% spread, you're going to net 50,000, which is the same as a T-bill. Right? And inflation goes back up to 7 or 8%, you're going to have a negative yield on that T-bill, right? Where gold will probably do better than that in that environment. So you'll be ahead. Plus, you'll get some of your hard-earned wealth out of the financial system and off to the side. Safety. Remember what I didn't mention before about gold and why it's so highly sought after by central banks in particular right now is it has no counterparty risk. It's one of the few investment alternatives in the world its value is not contingent upon a party that you're trading with's performance, whether it's a stock making profits or a mortgage, someone renting your property, paying the mortgage. That's counterparty risk. Gold is universally accepted around the world, and it has no counterparty risk. And that's why central banks are buying it in lieu of U.S. treasuries. You can't sanction gold that's in a vault somewhere, right? And it's a great way, as I said a couple times, to save as well.
Yeah, makes sense. And it did 15% this year alone, and just the spring of 2024. And that's exciting, and that's great. So got it. Now, I'm curious, maybe some of the bigger myths or some of the things that, the top 3 questions that people, misconceptions, especially, take it to someone who's worth $1 million, 5, 10, $100 million, and they have, mostly real estate wealth or businesses. They've made it themselves in the sense of they built a business or they built a real estate portfolio. They're very hands-on, and so walk us through how they might call you and say, all right, Dana, I'm learning about this gold and this silver. I get the inflation thing. That makes perfect sense. I want to use this as a savings. Would you do an analysis and say, okay, if you're worth $10 million, let's consider 5 or 10% in gold and silver? Like what? How would you walk through that? And would it be, well, how long are you planning on holding it on to for? Right, the time horizon. Walk us through a little bit of that kind of discussion you might have with somebody.
Right. So we would want to know a few things. Number one, how long do you intend to hold this for? Is this, short term, medium term, or long term? And we would recommend medium to long term for the best opportunity for appreciation and also for safety. Then we would like to know, what do you want? Do you want to try and gain greater profits in the shorter term, or look for better value? Because silver is another good alternative to gold, and we can arbitrage the two against each other by how many ounces of silver it takes to equal 1 ounce of gold. And today, that gold to silver ratio is about 75 to 1, which is high. Typically, it could be about 60 to 1 on average over the last 20 years. So silver's undervalued relative to gold. And if you go back to the 2011 peak in gold and silver of $1,950, 1900 for gold and $50 for silver, gold's about 27% over that today, while silver's about 30% under that today. So there's more opportunity with silver, but gold tends to go up a ladder, slow and steady, where silver can go sideways and be very disappointing for a while. But then when it plays catch up, it can play catch up with a vengeance and really make a big move. And we've seen that happen 3 times in the last 20 years, where silver's just made a big 30-40% move in 1 year. And that's just getting started sometimes. But it also takes a lot more room because there's 75 ounces of silver to 1 ounce of gold. So you've got a storage consideration. Where are you going to store your metal? You want to store it somewhere safely. We recommend you take delivery of it. We don't recommend you store with your bank. There are some private storage facilities, not too many of them, that are very professionally run that we do recommend, but there's only a couple of them in the country that we do recommend people use. And it's more for whether you have just a high dollar value or a high physical volume, right? Gold, as I said earlier, is very compact. You could have a couple 100 ounces of gold, which would be $1 million, sitting, on a shelf in your house, and no one would really know it was there. So you got to talk about storage. And then again, what's your exit strategy? What do you think you really want to do when it's time to liquidate? Right. So that's why we stick with the mainstream items that everybody understands and are liquid anywhere. We would like to have the opportunity to do buying and selling with you, but sometimes it's not convenient because it's a physical product and you do have to ship it, which means there's a little bit of friction or cumbersomeness with sending packages of high value around. But we can help you work through that too. Not a problem.
Got it. Okay, so A to Z, everybody. Danny Samuelson with Amerigold and AmeriGold.com. Amerigold is actually American Gold Exchange, your reliable hard asset advisor. American Gold Exchange. You can actually call them 1-800-613-9323, 1-800-613-9323. But American Gold Exchange is the name of the company. So Dana, you mentioned exits, right? And so we talked a little bit briefly before the show. Capital Gains Tax Solutions is one of the podcasts we have. And, someone might buy gold for $1,000 an ounce, right? And it goes to $1,900, the highest it's been, right? And all of a sudden they have this massive appreciation, right? Or even silver. They buy it at $20, I think it's an ounce. Am I saying this right? Yeah. And it goes to 50 or higher, right? And you have this massive appreciation. And so talk about the biggest frustration when it comes to capital gains tax as it pertains to exiting highly appreciated gold or silver.
Well, it is capital gains, so that's what you're subject to. We do have different broker reporting requirements. So, in 1986, the U.S. government came to our industry and said, no matter what you buy from the public, whether it was 1 ounce of silver, which was about $5 at the time, we would have to fill out a 1099-B on that transaction like a stock sale is done. And your gains would be figured on what you paid for it versus what you sold it for, the difference. Now, we made a negotiation with the government that said, okay, if you sell us 25 ounces or more of certain items, that's reportable on a 1099-B, or 1,000 ounces of silver or more on certain items, that's reportable. So today, we still have those reporting requirements, but there have been a lot of new items introduced into the marketplace that didn't exist when this list was made up. So we don't technically have to file a 1099-B on everything. You still have to do your own, good measures to make sure you're compliant, but we don't have to trigger that reporting. Number one. Number two, if this is a way you want to pass down some of your wealth to your heirs, sad to say, when you pass away, the cost basis steps up to what is valued at the point of your death. So whatever gains you've had in your lifetime, there's no tax on that.
Perfect. Yep. That's a great overview. I'm curious, if I live in California or New York, New Jersey, these high tax states, and I own the gold, is it going to be taxed, federal and state for the capital gains tax? Is that how that works, Dana?
No, I believe it's just federal. I don't
Okay.
believe it rolls down to the states.
Okay. And by the way, we have a solution for all of this in case you are selling highly appreciated gold or silver that has at least $1 million net proceeds, $1 million gain. You can defer the capital gains tax. It's now 20% federal. Biden is proposing potentially 44% for federal, and he's also proposing to take away the stepped-up basis. Dana, I don't know if you've heard of this yet. Whether or not that stuff actually goes through remains to be seen. But I think everyone needs to know what options you have. We have a great solution called a deferred sales trust that works for any asset of any kind. It could be a business, it could be stock, it could be gold, it could be cryptocurrency, it could be real estate, it could be a primary home. As long as it has $1 million net proceeds, $1 million gain, it's a good fit for people who are looking to defer that capital gains tax. Speaking of cryptocurrency and Bitcoin, I saw recently you did a interview with the Bitcoin versus the gold. It was like a friendly debate. A, how did that go? And then B, what did you learn, if anything, from the other gentleman speaking about the Bitcoin? And overall, what was the outcome of that debate?
Well, there's a couple of big picture comments I'll make. Number one, people under 40 love cryptocurrencies because they've grown up with smartphones and they can trade it right on their phone, right? So that is the attraction to the younger crowd. My customer base tends to be older clients who have been through, inflationary periods, or if we don't have a gold culture in this country. But if you've been in a country where your currency has failed or you've had war on your shores, you like precious metals a lot more. And that's Asia, Europe. So precious metals demand is much, much higher around the world than it is in the US. So there's an age difference, number one, where the younger crowd is starting to get a hold of precious metals now. And especially after Bitcoin took that big fall from 65,000 down to under 20. Well, now it's back up to 65,000, so everybody's happy again. But they're really complementary. In the big picture, Bitcoin and gold are really complementary. They're both trying to do the same thing, which is get some of your hard-earned wealth out of the system. What Bitcoin really excels at that precious metals don't is the ability to move large volumes of dollars or value over borders. Gold and silver or any normal currency can't do that easily, which is why the Chinese in particular love it when they can get past government controls. So we'll have to see how this all shakes out, but they're really quite complementary. And I didn't get Bitcoin at first, and I had an opportunity to buy it cheap, and I didn't, and I kicked myself in the butt for it. But I do understand it much more fully now, of course.
Hey, Daniel Samuelson, everybody, and he's with Amerigold.com. That's Amerigold.com, AMERgold.com. I appreciate your thoughts on it. So I'm exactly 40 years old, right? So I was, growing up, we remember the time where there was no cell phones, or just barely, just a big box in my dad's car. Before internet, right? Before, at least reliable internet. And then there was the internet, and then obviously everything else before. So we're kind of in that little sliver there. And so it's interesting, so I've never invested in gold personally myself. Just have never really had a chance to be fully educated and never been, just hadn't come across, right? Have dabbled and invested into some Bitcoin, some cryptocurrencies, but again, very small percentage. But mostly invest into real estate, hard assets. And so I do get I'm not a huge stocks guy. I'm more of a real estate type of investor is mainly. But I see everything you're saying, and I feel that a good balanced portfolio with working with experts like yourself to diversify is really important, especially when it comes to hard assets, comes to real estate, comes to gold, comes to silver, and also, I think Bitcoin's a big part of what we're really focused on for helping people exit and defer the capital gains tax, right, and diversify. Actually, in fact, we had a client; she bought it for $50,000, and the Bitcoin value at 54,000 a coin equaled $50 million, and so she exited 5 of the 50 million. And the main reason was she wanted to diversify before the market crashed back to about 20,000 a coin. So she's able to diversify, defer about 1.85 million of tax. So for crypto, by the way, or Bitcoin, it's the state and the federal. It's both. And so a lot of people either move to Puerto Rico or do all these things. And so we try to give people freedom and flexibility with their capital gains tax exit plans, not using a 1031 exchange or not having to go into some kind of asset. And the cool thing too is you could exit the crypto, defer the tax, and you can invest into gold. You could exit the real estate, defer the tax, and invest in the gold, a primary home, a business. In other words, it allows you to open up the investment box versus just being stuck in that one asset. Because I think that's probably the hardest thing I can imagine, Dana, for people coming to your way, is they've made a lot of wealth in the real estate, or they made a lot of wealth in the crypto, they made a lot of wealth in stocks, and gold has been that alternative when it should have been more of the primary, but they just haven't been, educated, and there's not too many of American gold exchanges around doing what you're doing. Is that a fair summary, or any thoughts on that?
No, I agree with you. I really love real estate as an investment, especially when you can buy an investment property where, a tenant basically covers your note and you get positive cash flow. Plus, you can get great tax benefits because the government incents you to do what they can't, which is house people. And there's really a great strategy, which I'm not the best one to explain it to you, where you can pair real estate, debt on real estate, and precious metals to enhance your profitability over time. That's a bit more complicated, I think, than we have time for.
Maybe you'll be back on the show and we'll talk about that because that sounds really interesting. But that being said, we're running out of time. You ready for the lightning round?
Yeah. Yes.
All right, know what you know now, Dana. If you could go back to your 20-year-old self, what's the one gold nugget make sure you tell yourself to do?
I would buy regularly gold and silver every year, a fixed dollar amount relative to my income, and just have been a stacker a lot longer than I have been.
Fantastic. Question number 2, what's the number one book or podcast or YouTube channel that you recommend or gifted the most in the past year?
I really do like Robert Kiyosaki's Rich Dad, Poor Dad. I'm actually a friend of Robert's because he's a big precious metals proponent. And I think for most people, if you haven't read that book, it's a game changer.
100%. Rich Dad, Poor Dad, and the game itself, the cash flow, get out of the rat race game. I have my kids play it. In fact, we just played it over the weekend. It was so fun. I said, whoever wins this game gets $25. And they're like, sweet. And they're diving in. They're doing the financial statements. They're learning about all things passive wealth, passive income, and replace expenses. So a huge, amazing game. If you are a parent and you have kids, please get that game. You should get the game anyways. You play it as parents. It's fun, right? It's adults. It's never too old. But especially the kids, if they can play that game, I think it's so powerful. And get the book, the purple book, Rich Dad, Poor Dad. Next question. What are you most curious about right now?
Oh, I'm most curious as to how this whole monetary experiment that we're in the middle of is going to really play out. I'm very concerned that the U.S. economy is about to enter a very weak phase. I think that consumers are very stretched out with credit card debt over $1 trillion and 1.25 trillion, and savings as low as it's been. I do think with 70% of our economy could slow down quite a lot. So I'm very worried about that. And then what would the government's response be? Print more, right? So they could turbocharge this whole situation that we're in even further. And I think that that's a pretty big possibility right now.
Yeah, well, that is curious, and that is kind of scary to think about. But I think you're thinking clearly to me. I don't, the math can't just be printing trillions and there's no consequences, right? Over 35 trillion now. Next question. Number one leadership quote or theme that you strive to live by?
Help others. Just help others. I've found that in my business, when we listen to what people are trying to accomplish and we help them with their goal, or in any manner of life, right? No matter what you're doing, if you help people, it comes back to you in many ways, often in intangible ways at first, but you can't do wrong by doing the right thing by others.
Got it. And last question, Dana, and it's kind of the theme of the podcast, which is we believe that stewardship over ownership is kind of the keystone habit to practice every day, right? And so I'm curious, what does that mean to you to be a steward versus an owner? And is there something you're really passionate about to help people in this world?
Well, I'm trying to empower people and get out some of their finances out of the system, because I do think the markets are rigged. The big players have all the advantage, and it's a disadvantage for us to try and play at the same level as them, buying and selling stocks or whatever. So you really need to be educated, and that goes to educating younger people. So that's part of what I'm doing now, is educating younger people. And you said it, the cash flow game is an excellent way to help younger people learn about how things really happen in the real world, especially in real estate. And I think we need to be good educators
Love it.
with everything we can do, especially with the younger people, because they don't have the our education system is leaving them behind in practical terms.
Yeah, 100%. And I couldn't agree with you more, Dana. I want to thank you for being on the show. Sharing so much wisdom about gold, about silver, about the history of the dollar and inflation, and ways to save and preserve your wealth in a time like this. I want to encourage you to keep using your amazing work ethic to succeed. Give it 110%, persevere, and confidence to attain that goal. Make a difference in people's lives with all things that you're passionate about with gold and silver. For our listeners who want to get in touch with you, one last time, would you remind them, where can they find you?
Our company is American Gold Exchange. Our website is www.amergold.com. We have a physical precious metals getting started guide, which is real simple, explains the basics that I kind of went over during the show. If you send an email to info at amergold.com and just say getting started guide in the subject line, we'll email you that guide. And if you want to pursue a conversation further, that's a good way to start. We're not spammers. We won't inundate you with a lot of stuff. We respect your privacy.
Amazing. Dana, thank you so much for being on the show. And also want to thank all of our listeners who are listening or watching on our YouTube channel. I want to remind everybody that in an ever-evolving landscape of being an entrepreneur or being an investor, the journey from $1 million to $1 billion is not just a leap, but a transformation that demands relentless innovation, strategic foresight, and an unwavering commitment to growth. I hope that here on the Built to Billions podcast, you're able to take a mindset of stewardship over ownership and take and build from the experts that we're having on the show to share their passion for making a difference and to help you build your wealth and make an impact. So I appreciate everyone today. Please rate, review, subscribe. If you need some help and want to look at a capital gains tax exit plan for your next exit, we want to encourage you to go to capitalgainstaxsolutions.com and check out our brand new book, #1 bestseller, Building a Capital Gains Tax Exit Plan. And this is for all things that you're looking to exit. Large real estate properties, businesses, real estate, gold, cryptocurrency. Just need to have $1 million gain, $1 million net proceeds. We have a solution for you. Go to Amazon and check out the book, Building a Capital Gains Tax Exit Plan. I'm Brett Swarts. Everybody, appreciate you listening and watching, and we'll talk to you again real soon.